High Yield Alert. TSLY, all you need to know about the Tesla Income ETF. Hey everyone, and welcome back to Chat ETF. Today, we're diving deep into a unique ETF, the YieldMax Tesla Option Income Strategy ETF, also known as TSLY. This bad boy claims to offer high income payouts while still giving you exposure to Tesla's growth potential. Sounds too good to be true, right? Well, that's what we're here to find out. We'll break down the pros and cons of TSLY, uncover its secrets, and answer the burning question, is this the right choice for you? Stick around, it's gonna be a wild ride. Question 1. What is the YieldMax Tesla Option Income Strategy ETF? The YieldMax Tesla Option Income Strategy ETF is an exchange-traded fund, ETF, designed to generate income through options trading on Tesla Incorporated (TSLA) stock. Managed by seasoned professionals, this ETF leverages advanced option strategies to capitalize on TSLA's volatility while mitigating risk. Question 2. What is the investment objective of TSLY? TSLY has a dual objective. Primary objective, generate current income through an options-based strategy focused on Tesla Incorporated (TSLA) stock. Secondary objective, provide exposure to the share price of Tesla, but with a limit on potential capital appreciation. Question 3. How does TSLY achieve its income objective? TSLY employs a covered call strategy on Tesla stock. This involves holding shares of Tesla. The fund maintains a portfolio of Tesla shares, providing some exposure to the stock's price movement. Selling call options. The fund sells call options on the Tesla shares it holds. These options grant the buyer the right, but not the obligation, to purchase the shares at a specific price, strike price, by a certain date, expiration date. Question 4. How does the covered call strategy generate income? The income comes from the premium received when selling the call options. The premium represents the compensation the option buyer pays for the right to potentially purchase the underlying stock, TSLA, at the strike price. Question 5. What are the key benefits that investors can expect from the YieldMax ETF? Investing in the YieldMax ETF offers several advantages, including income generation. The primary objective of the ETF is to generate income through options trading, providing investors with a steady stream of cash flow. Risk mitigation. By employing conservative option strategies and actively managing positions, the ETF seeks to minimize downside risk. Exposure to Tesla. As an ETF focused on options trading on Tesla stock, investors gain exposure to one of the most prominent and innovative companies in the world. Professional management. The ETF is managed by experienced professionals with expertise in options trading, providing investors with peace of mind and confidence in the fund's strategy. Question 6. What are the risks associated with TSLY's covered call strategy? While TSLY offers attractive income potential, several risks are inherent to its strategy. Limited upside potential. If the Tesla share price rises significantly above the strike price of the sold call options, TSLY misses out on the full capital appreciation. Investors foregoing potential upside should be comfortable with this limitation. Assignment risk. If the Tesla share price surpasses the strike price by a significant margin and the option buyer exercises their right to purchase, TSLY is obligated to sell the shares at the lower strike price. This can happen even if the investor desires continued long-term exposure to Tesla. Volatility risk. The income generated from selling call options is tied to market volatility. Lower volatility can lead to reduced premiums and potentially lower income for TSLY. Counterparty risk. The success of the covered call strategy relies on the ability of the option buyer to fulfill their contractual obligations. In rare cases, the option buyer may default, potentially impacting TSLY's returns. Question 7. What criteria does the YieldMax ETF use to select the options contracts it trades? The YieldMax ETF's selection process for options contracts typically involves analyzing factors such as strike price, expiration date, implied volatility, and premium yield. The ETF's management team employs rigorous quantitative and qualitative analysis to identify optimal trading opportunities that align with the fund's income generation objectives and risk parameters. Question 8. How does TSLY differ from traditional covered call ETFs? TSLY employs a more aggressive covered call strategy compared to many traditional covered call ETFs. This translates to selling call options with shorter expiration periods. This approach aims to generate higher premiums but also increases the frequency of rolling over options contracts, potentially incurring additional transaction costs. Selling calls with closer strike prices. This strategy aims to capture a larger portion of the premium, but it also increases the likelihood of assignment if the Tesla share price rises. Question 9. What is TSLY's dividend history and expense ratio? As of March 6, 2024, TSLY has a dividend yield of 55% based on the annualized distribution of the past year. However, it's important to understand that this high yield is partially a result of returning capital, not solely generated income. Expense ratio of 0.99%, which covers the fund's operational costs. Question 10. Who is TSLY suitable for? TSLY caters to investors seeking high current income, investors seeking a consistent income stream, even if it comes at the expense of potentially missing out on significant capital appreciation. Alternative income source. Investors looking to diversify their income sources beyond traditional fixed income investments. Exposure to Tesla with limited upside potential. Investors interested in exposure to Tesla but comfortable with a capped potential for capital appreciation. Question 11. What are some alternative options for investors seeking income? Several alternative options exist for investors seeking income, each with its own risk-return profile. Traditional fixed income investments, bonds, CDs, and other fixed income instruments offer relatively predictable income streams, but typically with lower yields compared to TSLY. Dividend-paying stocks. Investing in companies with a history of paying regular dividends can provide a steady income stream. However, dividend payments are not guaranteed and can be subject to company performance and management discretion. High-yield bonds. These bonds offer attractive yields, but come with higher credit risk and potential for capital loss. Other income-generating ETFs. Several other ETFs employ various strategies to generate income, each with its own risk profile and underlying assets. Question 12. What are some key takeaways for potential investors considering TSLY? Before investing in TSLY, consider the following. Understand the trade-off. TSLY prioritizes income generation through its covered call strategy, potentially limiting capital appreciation compared to directly owning Tesla stock. Assess your risk tolerance. TSLY is subject to various risks, including limited upside potential, assignment risk, and volatility. Ensure your risk tolerance aligns with the inherent risks of the strategy. Consider your investment goals. TSLY may be suitable for income-focused investors with longer timeframes and a lower risk tolerance for significant capital appreciation opportunities. Conduct thorough research. Always conduct your own research and due diligence before investing in any financial product, including TSLY. Consider the information presented in this Q&A as a starting point and consult with a financial advisor for personalized investment advice. Question 13. How does TSLY's covered call strategy impact its beta and volatility compared to Tesla stock? Due to the capped upside potential from selling call options, TSLY typically exhibits a lower beta than Tesla stock. This translates to reduced volatility compared to the underlying stock, as the fund's price movements are less sensitive to broader market fluctuations. However, it's important to remember that TSLY is not immune to volatility, and its price can still experience fluctuations, particularly related to changes in implied volatility and potential assignment risk. Question 14. How does TSLY manage the risk of early assignment of sold call options? TSLY employs dynamic option management strategies to mitigate the risk of early assignment. These strategies may involve monitoring the delta of the sold call options. Delta measures the sensitivity of the option's price to changes in the underlying stock price. As the Tesla share price approaches the strike price, TSLY may roll the options contracts by buying back the originally sold calls and selling new calls with a higher strike price or further expiration date. This strategy aims to capture additional premium while reducing the immediate assignment risk. Utilizing protective puts. In some instances, TSLY may incorporate protective put options into its strategy. These options grant the fund the right, but not the obligation, to sell Tesla shares at a predetermined price, put strike price, by a specific date. This creates a downside hedge, potentially limiting potential losses if the Tesla share price falls significantly. Question 15. How does TSLY's expense ratio compare to other option-based income strategies? TSLY's expense ratio of 0.99% falls within the typical range for actively managed option-based ETFs. However, it's crucial to compare the expense ratio to the expected income generation and net return of the strategy to assess its overall cost-effectiveness. Additionally, consider the expense ratios of alternative income-generating strategies, such as dividend-paying equity ETFs or actively managed fixed-income funds, to make informed investment decisions. Question 16. How does TSLY compare to other covered call ETFs focused on different underlying assets? While TSLY specifically focuses on Tesla, several other covered call ETFs target various asset classes, including equities, indices, and sectors. Comparing TSLY to these alternatives involves considering factors such as underlying asset. The risk-return profile of the underlying asset significantly impacts the potential returns and risks associated with the covered call strategy. Option selection strategy. As discussed earlier, the strike prices and expiration dates chosen for the sold options significantly influence the risk-reward dynamics of the ETF. Expense ratio. Comparing expense ratios allows for an evaluation of the relative cost-effectiveness of different covered call ETFs. Question 17. Can TSLY be used effectively in combination with other investment strategies within a portfolio? TSLY can potentially be used as a complementary holding within a diversified portfolio, particularly for investors seeking to enhance their overall portfolio income. TSLY's high dividend yield can contribute to an increased income stream within the portfolio. Reduce portfolio volatility. TSLY's typically lower beta compared to Tesla stock can offer some diversification benefits and potentially help mitigate overall portfolio volatility. However, it's crucial to remember that TSLY also introduces specific risks associated with its covered call strategy. Combining TSLY with other asset classes and investment strategies is essential to achieve a balanced and well-diversified portfolio. Alright everyone, that's all the time we have for TSLY today. Remember, this is just one piece of the puzzle, and it's crucial to do your own research before making any investment decisions. If you're interested in learning more about TSLY, I've left some helpful resources in the video description below, including links to the fund's website and additional research materials. As always, feel free to leave a comment down below with any questions you might have, and let us know what other ETFs you'd like us to chat about next. Thanks for watching, and don't forget to like and subscribe for more ETF discussions.